Hello, ladies and gentlemen. This is Bert Dohmen on April 15th, Tax Day. Today we're going to talk briefly about China. I've noticed that the analysts in the media are becoming very bullish on China. So let's take a look at the chart, because as I've said here for the last several years, 3 years in fact, since I wrote the book, The Coming China Crisis, China is probably the place to look for when the next financial crisis starts globally. China is huge. It's accounted for the biggest gains in commodity demand over the last 15 years. And when China has economic problems, as they are having now, then it will infect the world. So let's take a look at the A shares. The A shares can only be bought by Chinese in China. It's the ETF for that is ASHR. And here we can see 2014 is where the index bottomed. And right here is a place that I identified as the start of a crisis in China. Short-term interest rates tripled overnight from 7% to 25%. And as I said, now the government in China is going to throw everything they can at this problem, and probably the increase in liquidity is going to do something for the stock market. Well, even I didn't expect this kind of a stock market rally. This was huge. And everybody and their brother got into the stock market, speculating in the markets. People with no education, even people that couldn't even read or write, got into the stock market. And it was an amazing speculative bubble. Right here in the middle of 2015 was the top. It got too frothy, and that's when China saw a big crash here. The A shares were down 62% in just a few months' time. And here's where the government started buying stocks, putting money into the governmentally owned financial companies and telling them use these hundreds of billions of dollars to buy stocks in order to support the market. And that support action did work from middle of August to November, and then came the next selling wave. As you know, support is artificial, and market manipulation only works for a certain time, and then market forces take over. So now we did get down here in February of this year. We made a new low, new bear market low, and it was exactly the low that we saw in 2014. And as you know from my previous charts, old lows are always support and old highs are always resistance in the markets. Now look at this little rally here. This is what everybody's getting so excited about. This is a bear market bounce. In fact, I would call this almost a dead cat bounce. It's named after dropping a dead cat from a high building and seeing how high it bounces off of the sidewalk. They usually don't bounce very high. And this is about what we've seen here lately. This is what everybody's getting excited about, especially the people who believe the official GDP growth number from China around 6.5%, which of course is total fiction. In my opinion, the most we could expect on this is the high here, the start of the gap, and then we should go down again and probably to new lower lows before the year is out. And that, of course, has some very important implications for the global markets. In our Wellington letter, which is now issued about 2 to 4 times per month, we follow China very closely, and we also give you the fundamental reasons of why we think China is in big trouble, and all of the positive statements that you hear in the media are nothing more than public relations. So be sure to get our Wellington letter on a regular basis.